Boom, what's up you guys? It's Royce Jacob, and welcome back to the channel. Sell in May and go away. This is a term that investors have been using for many years. I'm sure you've heard of it, and it pretty much just explains the idea that the months of May to October carry less potential yield than the months of November to April, or said differently, the months of November to April are just better overall for investing. But in this video, I want to counter that idea and explain why this idea generally seems a little outdated. And I also want to go over some of the current events and macroeconomic catalysts that could potentially result in a pretty exceptional summer, maybe even leading into the fall months of 2025. So to do that, we're going to read over this Market Watch article titled "Investors Who Followed Sell in May and Go Away are missing what could be the best May for the S&P 500 in decades." The S&P 500 is heading for its best monthly performance since 2023 and potentially its biggest gain since 1990. This article is just based on this title. I'm sure you can tell that it is reflecting on the month that's behind us. But in this video, I also want to just create a sense of optimism moving forward, why I am bullish personally on the summer months. And yeah, I'll just get into that more as we read through the article, okay? So before we get to reading, I just want to let you know that I did feature this article in my last newsletter of May. I write these every single day. This is my daily trade analysis newsletter, which follows my daily flash trade newsletter. So if you guys want this, if you guys want a full breakdown of my personal portfolio, which once again is updated every single trading day along with my flash trade newsletters and trade alerts, you can see here that I am optimistic. My money is where my mouth is. The call options portfolio specifically is currently weighted 90 to 10 call options to put options, which is risky. That is clearly a very heavily weighted in one direction portfolio breakdown. But I'm optimistic. My call options are longer term expirations. And if you want to know what they all are, what is below this, if I scroll down, then it's the first link in the description. Again, full breakdown of the portfolio, all of my daily trade analysis, daily trade alert newsletters as well. Everything that this box here entails, $15 a month, $40 for every 3 months. Try free. The reason I do free trials is because I'm very confident in the product I provide. So if you do choose to join, welcome to the team. We look forward to having you and look forward to making some waves in the months of June, July, August, and beyond. The past month, May, we closed it out with a bang. I'm sure many of you are aware that we did make an amazing C3 AI trade, and I'm really excited for the next trades like it. So again, welcome to the team if you do join. If not, I hope you gain some value from this video. Let's get to reading. The old axiom in the stock market about selling your stocks at the close of April and buying them back at the start of November used to make some sense from a seasonality standpoint. When the US was more of an industrialized economy, said market strategist at First Trust in a research note. But over the last 20 years, an investor who remained fully invested in the S&P 500 from May through October enjoyed an average annual total return of 3.92%. During those months alone, a significant figure when compounded. The S&P 500 is seeing a strong rebound after 3 straight months of declines. Markets saw significant turmoil in April after President Donald Trump's Liberation Day tariffs sparked fears of a recession and higher inflation. But large levies rolled out by the White House have since been paused as the White House aims for progress on trade negotiations. So far, the Trump administration has appeared to temper its more strident tariff policies in response to signs of distress in markets. Ulrich Hoffman, we'll call him UHB, Chief Investment Officer of Global Equities at UBS Global Wealth Management, said in a note on Wednesday. The U.S. stock market has responded favorably to tariff pauses and tariffs, including those announced this month for steep levies on imported goods from China and the European Union. Investors cheered the mid-May breakthrough in talks between U.S. and China, which resulted in lower tariffs for 90 days. Then, over Memorial Day weekend, Trump said he was delaying a massive 50% tariff on the EU until July 9th. The S&P 500 rallied 2% on Tuesday as U.S. investors, on their return from the 3-day holiday weekend, pushed stocks higher on the EU tariff pause. That marked the S&P 500's strongest gain since May 12th, the day the stock market rallied on the positive outcome from the U.S.-China trade talks. Quote, back when the U.S. was more of an industrialized economy, it was common for plants and factories to close for a month or longer in the summer, the First Trust strategist said. This downtime allowed businesses to retool and gave employees time to vacation. That gave way to the sell in May theory, which was based on the idea that companies would conduct less commerce in that 6-month span, which would likely translate into lower earnings and temporarily reduce stock prices, the strategist explained. But today, the U.S. economy is so technologically advanced and globally competitive that companies can no longer afford these extended periods of stagnation, they wrote. Based on their research, the S&P 500 posted losses on a total return basis over the May through October period only 3 times in the past 20 years through 2024. Those losses came in 2008, 2011, and 2022, the strategist found, pointing to the table below in their May 1st note. So again, I featured this in the newsletter. If you receive the newsletter, you can obviously go look at that. I'll let you guys, this one might be a little bigger, so I'll let you just pause this and take a look at it if you'd like. But again, the important point here, only 3 of the last 20 years posted negative returns, with a lot of these returns very impressive. You can see some double-digit gains in there. So just keep in mind, you guys, the overall lesson here is classic Warren Buffett quote, like it's time in the market. It's not timing the market. Just stay invested. If you're invested for the long term, stay invested. Personally, I do, as many of you know, have a long-term like retirement portfolio with many of the names that we discuss here on the channel. But right now, I am trying to trade. I do think that I will say, if you're watching this within the next week, I think there could be some volatility leading into the Fed meeting later this month. So I'll just say that right up front. But overall, when it comes to the majority of June, July, moving through the summer months, I am bullish, and my portfolio will reflect that sentiment. Okay, but with that said, it is always important to stay hedged. As I just said in the newsletter, or is it wrong pages? As I just said in the newsletter, again, call options are 90%, but I do still have pretty significant hedge positions on board just in case. So just keep in mind, you guys, regardless of how bullish you may be or how promising things may seem, always, regardless of your own conviction, stay safe and stay hedged. Okay, just we'll close it out here, you guys. The table above also shows the top sector gains in May through October over the past 2 decades. 17 of those 20 top performing sectors posted total returns exceeding 10% during that May to October stretch. Not all market maxims should be taken at face value, the First Trust strategist said. They said their research does not support the notion that investors should sell in May and go away. Okay, so to close this all up, again, this part here where we read about why this saying was initially created, right? Factories closed, giving people a break, time to retool, etc. The landscape is different. The geopolitical, just the landscape overall, as far as business structure is concerned, is different with the takeover of tech, definitely AI. So keep in mind, you guys, right now, there are always going to be sectors of the market that underperform and that outperform. And let's just hope that we can do our best to find those outperforming sectors of the market. So let's hope for the best, you guys. I will be recording a Waves Plays after this. If you are not a member of the YouTube channel yet, you can hit the join button below. That's only $5 a month. But I do the weekly Waves Plays videos going over all of the plays that we feature in the portfolio, giving real-time technical analysis and just, some updates on news and whatnot. So again, if you want those weekly Waves Plays videos, hit the join button below, as well as some trader tips videos where I go over, TA lessons and all that fun stuff. So again, appreciate you watching. I hope you gained some value from this. Let me know which stocks are your favorite, what stocks are you trading through the summer, and or whatever you want to talk about. I'll see you in the comments. I appreciate you watching, and until next time, always remember, take action, make waves. Peace.